Well, Jeff, it's good to see you again. You know, we're both partners in the same office here in Chicago, but here we are working remotely together. Um, you know, Clients are doing a lot in the space of restructuring their business. Tell me a bit more about that from your perspective as a state tax partner.
Yeah, certainly, Rodney. It's great to see you as well. And as we look at what's been occurring over the last 7 months or more, we're seeing a lot of changes from a business perspective, right? Whether that's supply chain disruption, digital transformation, right? Organizations are evolving and at rapid paces, and that really does have an impact on both their state and local tax footprint, but also the cost associated with state tax, right? There's an increase and a lower gap between state and federal as part of the big chunk of a company's ETR. And so there's a real necessity to look at business operations, look at their structure, and align that with their state and local tax footprint right now.
And I know it's kind of interesting, right, Jeff? Because oftentimes I know when I talk to, in particular, non-US colleagues, they do fail to appreciate that point that we have a second tier of tax, state and local, and actually the rates are pretty high. And then I also find a lot of people overlook it in the context of cross-border restructuring of their business as well. What are you seeing in that space?
Well, I will tell you, it has never been more important for a state and international to be connected, whether that's at KPMG or at our clients, typically both, right? Because of things like tax reform, because of globalization, right? We are seeing ever more that state and international need to be connected because so many things that are happening due to tax reform have a direct impact on state. And to your point, right? It's a big part of the ETR for a company. And so any impacts can have broad-based changes to the state and local tax liability, to their footprint, et cetera. And, I think you layer in another factor to that, and people are mobile right now, right? So we have, individuals and organizations that are moving across jurisdictions, whether that's country to country or state to state. And that certainly has an impact on an organization.
So just fascinating, Jeff. And, if you had a couple of things that just consistently come up when you're working in restructuring, just a couple of things that either people like consistently overlook or consistently need to be reminded about, what would those couple of pieces of advice be?
That's a great question. I would say it's three things, right? It's what we're talking about here. It's tax reform, right? You cannot restructure your business and think only about state if you're a multinational, because it's going to have impact on international, and vice versa. You can't think about just international and not realize there's going to be a state impact. So that's one. Two is the favorite state tax answer, which is nexus. And again, that's with changes to business, changes where people are. That has an impact on direct taxes, indirect taxes here in the US. And then the third piece is really tax rate and sourcing. Apportionment being a big component of state tax. How do you calculate that? There's been broad sweeping changes over the last few years with respect to that. And then statutory rate increases. I would really say those are the three big things to think about as you think about how you restructure your business and effectively your org chart.
Well, it's no wonder, Jeff, that you're keeping so busy these days.
Certainly.
Thank you for your time. I look forward to catching up with you in person, even though we live, like 15 miles apart? Okay.
Thank you, Rodney. I appreciate the time.
Thanks, Jeff.